This is ShadowQuant, Week Ahead, brought to you by AriesLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Sunday, August 23, 2026, and this is the Tokyo session. Now, let's get into it. Welcome to ShadowQuant's Week Ahead. NVIDIA reports after the close on Thursday, and its guidance will be the single most important data point for the entire AI trade this week. We are live on Sunday, August 23, 2026. Let's start with last week's call grades. Pulse, you were on a 2-call winning streak last week, but the track record shows you are 7 out of 5 overall. Let's see if the momentum holds. Grid, you were on a 6-call losing streak. 5 out of 9 is a tough run. SPECTER, 6 out of 18 with 2 misses in a row. And Apex, 4 in a row on the wrong side at 4 out of 17. Let's get to work. Last week, the macro backdrop was dominated by the Federal Reserve's pause and the realization that inflation remains stickier than the market hoped. The 2-year, 10-year yield curve stayed firmly positive at 50 basis points, confirming that the economy is in a soft landing scenario rather than a recession. I called for equities to grind higher into the weekend, and the S&P 500 closed at $765, so I'll take the win there. But the inflation data, the 3.3% consumer price index and 3.29% core personal consumption expenditures, means the Fed's work is not done. The bar for the next move is incredibly high.
I missed the mark on the Nasdaq. I called for a bounce in the tech-heavy QQQ, but it closed down 2.4% for the week at $713. The rotation out of technology down 3.5% for the week was too strong. I'm adjusting my models. The market isn't buying the AI narrative right now without concrete earnings proof, which brings us right into this week's earnings calendar.
I missed on the dollar. I called for a stronger dollar against the euro, but the euro-dollar actually ticked up to 1.1682. The trade-weighted dollar index fell by 0.28% to 118.90, meaning the greenback is weakening across the board. My call for a safe haven bid in gold was correct, though. Gold closed at $4,642, up 0.7% for the week.
I missed on the cross-market theme. I called for a strong correlation between rising yields and falling small caps, but the Russell 2000 only fell 1.68%, while the Nasdaq sold off harder. The disconnect between growth and value tells us the market is rotating, not just selling off risk. I need to recalibrate how I weigh sector rotation against macro data.
Pulse, set the macro landscape for the week ahead. This week, the macro calendar is actually remarkably quiet. There are no Federal Reserve meetings, no FOMC decisions, and no major inflation releases like consumer price index or personal consumption expenditures for the week of August 24th through 28th. The last major data point we have is the 2-year Treasury at 4.19% and the 10-year at 4.69%, giving us a healthy 50 basis point spread. The unemployment rate sits at 4.10%, and real gross domestic product is growing at 1.50% annualized. This is a data vacuum week. The macro tone is neutral, meaning the market will not be driven by new central bank rhetoric or Fed data releases. Instead, the narrative will be entirely driven by corporate earnings, specifically the bellwether reports that will act as a proxy for economic health. The absence of macro noise means equity and crypto flows will dominate the price action. Grid, we have a heavy earnings week. Let's talk indices and the key reports.
Right, the indices closed Friday with the S&P 500 at $765.72, down 1.37% for the week. The Nasdaq 100, tracked by QQQ, was the weakest at $713.44, down 2.41%. The Dow closed at $532.22, down only 0.8%. And the Russell 2000 at $299.96, down 1.68%.
SPECTER, let's look at the cross-currents in currencies and risk.
The VIX closed at 15.13 on Friday, down 0.08 from the previous session. The 5-day range was 14.77 to 16.14. That is normal, low volatility territory. The market is complacent, which is dangerous heading into NVIDIA.
CIPHER, what's the setup in digital assets?
Bitcoin and Ethereum are currently trading in correlation with the Nasdaq, but there are divergences. The Fear and Greed Index is not in our data set, but we can look at on-chain flows.
Apex, let's synthesize. What's the dominant narrative?
The dominant narrative is the NVIDIA test. The macro is neutral, the VIX is low, and the dollar is slightly weak. This means the market is coiled.
Yes, the 2-year yield at 4.19% and 10-year at 4.69% means borrowing costs are elevated, which hurts growth stocks more than value. The GDP growth of 1.5% supports a soft landing, which favors healthcare and energy over tech.
Absolutely. The S&P is at 765 with support at 762. If NVIDIA breaks below $210 on weak guidance, the Nasdaq will likely test $708. The sector rotation data shows tech is already the laggard. A miss confirms the downtrend.
The VIX is at 15.13, which is low. Leveraged funds are bearish on the euro and yen, but neutral on gold. If the VIX spikes to 18, gold will rally. The 5-day range for gold was 4,324 to 4,657. A break above 4,657 would signal a strong safe haven bid.
Yes, the PayPay IPO for Binance Japan is a $1.1 billion inflow event. Combined with the CBDC ban in the Senate bill, regulatory clarity is improving. If equities fall, crypto benefits from the digital gold narrative, especially with geopolitical outflows spiking in the Middle East.
So the single most important thing to watch this week is NVIDIA's Thursday after-close report. It will determine if the rotation is temporary or structural. If NVIDIA beats, the Nasdaq bounces and gold stalls. If NVIDIA misses, the rotation accelerates, gold rallies and crypto may decouple higher.
Calls on the record, 1 each. The macro backdrop is neutral, with yields stable and no Fed meetings. The 2-year, 10-year spread is healthy at 50 basis points, and GDP is growing at 1.5%. I expect the S&P 500 to grind higher into the weekend as the market digests PDD and Dollar Tree, which are both in defensive/consumer sectors that are outperforming. My call, S&P 500, SPY, bullish, target $775 by Friday close.
NVIDIA is the catalyst. It has beaten the last 2 quarters and the street expects $2.01 per share. The stock is down 8.9% from its high, so there is room for a cover rally. If it beats on Thursday, the Nasdaq will snap its 2-week losing streak. My call, Nasdaq 100, QQQ bullish, target $725 by Friday close.
Gold is near its 5-day high of $4,657. Indian demand is doubling, and fiscal fears are driving safe haven buying. The VIX is low at 15.13, meaning there is room for a volatility spike if equities fall. Gold will benefit from both safe haven flows and dollar weakness. My call, gold bullish, target $4,680 by Friday close.
The PayPay IPO for Binance Japan is a massive institutional inflow event. Combined with the CBDC ban and geopolitical outflows, crypto fundamentals are strengthening. Bitcoin will likely hold its range or break higher as tech sells off. My call, Bitcoin bullish, target $69,000 by Friday close.
The cross-market theme is the NVIDIA test. If NVIDIA beats, risk assets rally. If it misses, gold and crypto outperform. Given the strong prior beat streak and the institutional inflows in crypto, I expect a risk-on resolution. My call, S&P 500, SPY, bullish, target $770 by Friday close.
If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This content is generated by artificial intelligence and is for informational and entertainment purposes only. It does not constitute financial advice. Markets carry significant risk of loss. Always do your own research before making any investment or trading decisions. That wraps up this edition of ShadowQuant. Stay tuned for the London session, where we will see how these calls play out. Until then, trade safe.